What's good, everybody? It's Jordan. Come back at you on another video. So for this video, I'm going to do a trade recap for Monday, July 20. So as you can see, if you look at the bottom right of my computer, you'll see it is in fact July 20 right now, and it is 11:32 a.m. So my trading window is from 9:30 a.m. to 11 a.m. So it's been 30 minutes since the conclusion of the session, and I wanted to do a breakdown for you guys here. Now, before we begin, you probably noticed something different, and that difference is that usually you can see me in the bottom left screen, and that's because I usually have my camera. It's connected, like my computer doesn't have a camera. It's like a separate external USB camera, and that camera has been giving me issues literally for many months. Well, at this point, years, and don't know why it acts up. So, for the foreseeable future, you probably won't be able to see me until I get a new camera. So just know that these breakdowns most likely moving forward won't show me for the time being, and eventually I will get a new camera to fix this because I do like showing my face and showing you guys, it's sort of the form of entertainment, right? Um, so that's that. And the second thing is that on this trading day for Monday, I did not take a trade, and we're gonna go through the breakdown, but this was a very quick, simple trading day because price did not give me what I was looking for, and so I did not engage with it. And that's what you need to know and remember as a trader, right? You can have your strategy, and with your strategy, there needs to be certain things that happen in the marketplace, like your confirmations need to be met in order for you to take a trade. On this day, my confirmations were not met, and you're going to see the breakdown there. So like we always do before we jump into any trading session, we always open up Forex Factory, and surprisingly on this week there's absolutely nothing. There's no red folders, no gray folders. So that means this whole week I'm going to be behind the charts each and every day, um, looking for setups, right? So jumping in, we go in the 1 hour time frame to look for our higher time frame bias. So this higher time frame bias, this is 80% of the work. And the reason for this is because you need to remember, as traders, we are always going to be at the mercy of the market. We cannot control the market. Therefore, when we take trades, right, we want to trade in alignment with the market so that we can ride the wave, right? Like if the market is most likely going to go higher, then it would make sense for us to buy price so that we can take price higher with the market, and vice versa for a sell, right? If the market is most likely to go higher, it wouldn't really make as much sense to look for sells because then you'll probably only get small moves, or you won't be able to ride that the wave on the higher time frame, right? So that's the logic with that, right? Higher time frame bias is just which direction is price most likely going to go, either up or down, right? It's just that simple. So here we determine that on the 1 hour time frame. So right, previously for the last trading day, right, for Friday, these were both buy days, right? Because price was bullish, which is why here we took a buy, which resulted in a mega win of a trade, and the same setup presented itself on the Nas, right? So the previous day we were bullish. Now, um, previously we had this high and then this low, and then eventually a new low was formed, right? And this was the high. This right here was the high prior to this low was low, and then eventually you see an aggressive move up, right? This move up clears these high. So now this is the high, and then you see, right, that this high now gets cleared with this high. So obviously this high is higher than this high. So prior to this highest move, right, this high candle, what was the previous swing low, right? Is this swing low right here. Now clearly that swing low was not traded through at all. It was not, price never traveled under this low. So as of now for the S&P, I am bullish. Now if we look at the Nas, right, you'll see that it was previously bullish, price made this high, and then this high was cleared with this candle up here. So this move up here, what was the last swing low prior to this move, right, is this low right here. Now clearly this low was not traded through, price never went under this low, so we are bullish for both pairs. Jumping into the 15-minute time frame, since we are bullish now, right, we want to wait till at least probably 8:45, and now we want to find the 8:30 candle. So this gold candle, this is the candle from 8:15 to 8:30. So if we look to the left, what is the most recent swing low prior to 8:30? And the obvious answer is this low right here, right? And the reason why I'm marking this is because at 8:30, 8:30 is when the liquidity hunt begins. That's when price begins breaking all market structure logic and all market movement logic because it is hunting after, is going after liquidity, right? So if we expect price to go on this level, we like right under SSI liquidity, we're expecting that price is going under to take liquidity and then move up, not because it's going down to break structure, right? So we have the swing low there. Now, if we look at the NAS, right, this gold candle is the 830 candle, 815, 830. We look to the left, the most obvious swing low is this swing low right here because, you know, the candles to the left and the right are both higher. Now we marked our point of interest. So now it's time to mark some obvious targets, right? So, excuse me, up here, this is the high of London, right? Because this green background is London session. That is the high of London. Same if we look at the NAS, right? This high right here is the high of London. So to me, those are immediate low-hanging fruit, immediate upside targets. So now we have that. So now we just have one target. Now what we want to do, if we want to find more targets, we just look to the left, right? We pull price back and then we see are there any other targets. So for me, I see another obvious high for the NAS right here. Right now you can mark this high, but this high, these two highs are really close, and I rather mark this high because then you can mark a fair value gap right over here, right? So you're seeing London high as a target, you're seeing this fair value gap as a target, and then these highs as a target. And to me, you don't have to go crazy with the targets. This is the most likely target to get hit, and these are like, you know, a little bit further out. So if I were to take, like, if a trade were to present itself, right, to me, I would close at the very least 80 to 90% of my position here, depending on what the risk reward looks like, and then, you know, I'll take smaller targets, smaller partials up there. Now, the same idea if we look at the S&P, right? S&P, we have the London highs, clear as day right here. Now we have, this is the next 15-minute high that's directly above it. Well, I mean, technically speaking, you could use this high, but you know, this high is very close to this high, right? Look how close the rays are, right? So I wouldn't really do that. I would just kind of have it like this. And these would basically be the targets I'm looking at. Like, of course, you have potential highs here, and then if you go higher, right, you have more here. But this, for me, there's no need to get like ridiculously aggressive, right? These are the immediate targets that I'm seeing. So now jump into like the 1 minute time frame for both pairs, and now we essentially want to watch price. So right now price is at, the time is at 8:45. So remember, after 8:30, that's when the hunt for liquidity begins. Price decide, you know, will have like a mind of its own. However, we maintain our bullish bias, right? We want to see the point of interest, which is the sell side liquidity, get cleared. We want price to do that by going down, and then we want price to give us an entry so that we could take it higher because we are in fact bullish for both pairs, right? So now we'll fast forward a little bit, right? Price is kind of like consolidating, and now we are getting close. So here we are approximately at 925, 926. Now remember, we are bullish, and so we want as many upside targets to stay available, right? So here, if we look at the S&P, this is an obvious fair value gap. We ideally want that target to remain open because then there's more reasons for price to want to go higher. And now also, if you look here, this was also equal highs, right? This was effectively a double top, or how most traders would think as resistance. So there's a lot of liquidity at this level, and unfortunately, prior to 9:30, price came up and cleared this up here. So this is already gone, and price is also getting really close to, look at this, right? And price is getting really close to this fair value gap, which is not desirable because, like I said, if we're expecting price to go down and then go up, we want to see as many upside targets remain available, right? Like we have another target, another potential target, you know, right here that we can take partials at, right? We want all these targets to remain available for us. Same idea with the NAS, right? We look at the NAS. What do you see here, right? Is that not a double top? Is that not quote unquote resistance, right? That's liquidity. Then what are you also seeing right here? Another fair value gap. Now we could like raise it up a little higher, right? Because this is the part of the fair value gap that still remain untapped, right? you're seeing there's reason to want to go higher. So this is how I'm able to not only have my bias, but also begin marking out the important levels of the reason why price would want to go in that direction. So I'm already not a fan of the S&P making this move and closing this gap, because then there's less reason for it to want to go higher. Now, if you look at the Nas also tapped into the gap and also began diving into the liquidity. So not really a fan of the movement here. So right now at this point is 927. At this point, right, not only we're waiting for 9:30 open, but in my mind, I'm telling myself that it might be possible that price might not even go down to our point of interest, and instead it might just decide to go straight up after 9:30. And if that were to happen, remember, we're bullish. So if price were to go up and to clear these targets, clear all these targets here, right, before entering this level, like if price doesn't enter the sell side liquidity and give us an entry before going higher, then we just have to leave price alone, right? And then we'll just show up the next day. So you see S&P decided to push further while the Nas began rejecting. So out of these two pairs, I'm more interested in the Nas because right now the price action is better as far as like what I want to see from price. So now we are at 9:30. So this is the 9:30 open, this next candle. So as you can see, right, 9:30 open for the S&P cleared the high of the session. This now made the high of the New York session, which the New York session is the brown background, and is getting closer to clearing the high of London, which might be the high of the day as well. So at this point, if I had to choose between both pairs, right, I would be more interested, significantly more interested in the NAS, because even though it closed the fair value gap and cleared some of this liquidity, right, it's definitely in a much better position than the S&P. So my attention is pretty much on the Nas, but at this point, I'm still watching price. Right, Nas made another deeper push, and then boom, right? At this point, you see the Nas, it filled the gap, it cleared these highs, and it cleared the London highs. And the S&P is getting very close to clearing the London highs. So at this point, right, I'm done. So it is 9:33, right? So my trading windows from 9:30 to 11, it's now 9:33, and price has went up and cleared the targets that we were looking to take. So look at this move here, right? At this point, I'm done, right? I am walking away from the charts, and the reason for it is because we are, in fact, like, our higher time frame bias was correct. I tell you guys all the time, higher time frame bias is 80% of the work, because you are moving with the overall trend in the market. And we were correct with our higher time frame bias, because what happened? Price went straight up and price just exploded up. So we were correct with our bias. The only thing is that price just did not give us an opportunity, because it never entered our point of interest. It never attacked the sell side liquidity. So there's nothing for us to do. We just have to sit here and watch price take off, because there's some traders who are going to try to chase after this move, and if your strategy allows you to do that, then you have a trade. But my strategy doesn't, because price never took any sell side liquidity, so there's nothing for me to do. So this move here does not interest me, because it does not give me what I'm looking for. And plus, remember, the low of the session is down here, and that is where we wanted price to attack, right? Same idea here, right? This is the low of the New York session, is brown background. So if price were to have come down here first and then go up, we would have tried to take an entry at this level, right? And if you think about it, it's much better to take an entry down here with a stop loss under here to take price all the way up here than it is to try to chase price and then try to go for a long somewhere over here, stop loss here, right? Like, the risk reward is just so much better, right? Like, that's why I'm not interested in chasing after price if price doesn't give me what I'm looking for, right? The same idea with the NAS, which we're waiting for price to go on this level because we want to take price for a buy. We want to take it, we want to ride price all the way up, not take price when price already made the expansion move higher. Now, to just save you all time, I'm going to end the replay, right? We go to 5-minute time frame. You're going to see that price essentially went up, it cleared a lot of the liquidity, and then it began reversing. Same idea with the NAS, right? NAS after 9:30, it went up, cleared the liquidity here, tapped into fair value gap, and then it started reversing. Now, there's going to be some people who might ask, well, Joel, why didn't you just go for a sell? Because price took out buy side liquidity, and you could have taken a sell and then take price all the way down. The reason why I'm not going to do that, and I didn't do that, is because we entered with a bias towards the upside. So I was bullish on the day. So that means I'm only looking to take buys. I'm not interested in taking sells. And price went up and cleared our targets, right? Price went up and cleared our targets before it gave us an entry, before it tapped into our point of interest and gave us an entry. So that means price took off without you. So there's no reason for you to chase. You have to understand that in this market, there's going to be so many more opportunities for you to take trades. So there's going to be times where you're going to show up behind the charts and you're not going to have the opportunity. That price isn't going to give you an opportunity to enter. But that doesn't mean you were wrong, because the bias clearly was correct, right? Price made an explosive move to the upside. So if we were in the trade, chances are it would have worked out in our favor and we would have smashed the targets. But price didn't give us an entry, so there's nothing for us to do. And if price hits our target without giving us an entry, then there's no point in sitting behind the charts trying to chase price. That is how you end up taking low probability setups and end up taking unnecessary losses, because that's your impatience and your greed kicking in. You need to be okay with walking away from price if price doesn't give you what you're looking for. And on this day, it didn't, right? And just because price took out buy side liquidity, and if I go on the 1 minute time frame, that price took out buy side liquidity and then broke structure here and started going down, right? Same idea here, right? Price broke structure and started going down. That doesn't give me enough reason to chase it, because I'm bullish and I stick with my buys for the trading session. For the day, once I have my buys, I stick with the buys for the entire session. So if my targets were taken, then there's no reason for price to go higher, right? Like, price took the targets, so I'm not gonna sell price or watch price now go under the liquidity, right, to go down here and then try to enter for a buy. Even though technically speaking, right, like, price did leave a fair value gap, right? Price left a fair value gap right here after clearing liquidity, left the fair value gap, and then price did technically give an entry, but then look what happened. Price went up a little bit and then they decided to go all the way down, and then it would have resulted in a loss, right? And this, yeah, so it would have literally resulted in a loss. Why? Because the upside targets were already cleared, so there's very little reason for price to want to go higher. So it's very possible that price might continue higher, or maybe price might just go lower and just decide to reverse in direction and now become bearish. It really doesn't matter, right? We're going to trade whatever direction price wants to head towards. But this is why when price goes up and clear your targets, this is why you don't want to just sit here behind the charts, because you sit here, you're going to be trying to force a trade that isn't there. Price already took the upside targets, so there's less reason for price to want to go up, which is why if you were to enter here, you would have ended up taking an unnecessary loss. Like, the move already happened and it happened without you, so it's okay. Same idea with the NAS, right? Price dips in and then it leaves a fair value gap, and you able it technically would be an entry, but once again, the like, price already took off and made the push higher. So this push down here is probably just a retracement or consolidation or whatever it is. And then obviously if you would have taken an entry right here, it would have resulted in a loss, because your stop loss would have been down here and you would have taken an unnecessary loss for being impatient and trying to be greedy. So moral of the story on this day is that if you have a bias, right, and price just decides to go in the direction of the bias and hit the targets without tapping into your point of interest, which is the liquidity that you want to see purged, then just step away from the charts. Literally 3 minutes into this trading session, once I seen price explode and go after targets, I close trading view. There's nothing for me to do, right? You don't want to get impatient, because when you're impatient, when you, right, like, all this stuff that's happening here, right, this is all low probability. That's why I don't trade it. All this move here is just like, price is like consolidating, right? It's like, you don't want to be in this. You want to be in this larger expansion move when price is exploding, right? And that's what happens when you trade with sound logic. Taking a trade afterwards would just be you gambling, would just be you trying to be greedy, wanting money, and it would have resulted in you taking a loss. So I say all this to show you the discipline that's required to be a successful trader. If you want to have a high win rate, if you want to catch amazing moves, if you want to succeed and be consistent, you do that by being patient and by following your strategy and trust that your plan is what's going to allow you to be successful in this market. So that rest of the video. Enjoy the video. Do leave a like and subscribe as we're on the road to a million subscriber, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.